Everybody, this is Rob Keynes with goldsilverpros.com. We have a first-time guest on the program. It is Alan Pangborn, who's the Chief Executive Officer and Director of Chesapeake Gold Corp, here to talk about his project in Mexico. Alan, how are you doing today?
Really good, really good. How are you, Robert?
I'm doing very, very well. We've been talking with your company for the last couple of months about coming on the program because I think you have a really good-looking project that has very good fundamentals, and we'll get into your PEA that you just released here in a moment. Before we do that, I wanted to talk about gold and silver, which is what you guys have in this project. Why gold and silver? Why are you involved in gold and silver in mining, and why not like a base metal like a copper or something like that?
Gold and silver it's almost counter-cyclical. It's perceived as a storage of wealth. Silver in particular tends to have a much larger beta than gold and certainly base metals. And it generally has the type and size of projects that the smaller mining companies can get into. You know, base metal projects are very large, very capital intensive, very long development timelines. I've worked in both. I've worked on both sides. So I've worked in gold and silver. I've also worked in copper and nickel and other base metals. And the gold projects and silver projects offer a scale and a type of project that is doable for the more junior markets, which is what Chesapeake is.
Interesting. So do you follow the gold and silver markets at all in terms of macroeconomics or fundamentals of those? Is that part of what goes into your decision on building a mine? Because certainly gold and silver move up and down. A lot of it has to do with macroeconomic concerns with the economy, things like inflation. Do you follow that in order to help you facilitate decisions about where you may take this mine going down the road?
I follow it. And, you know, you watch the craziness that's happening at the moment where the US, Canada, Australia, and everybody is printing money and just literally throwing it out of a plane to keep people happy as we try and survive COVID. You know, the debt of each country to GDP just continues to grow and continues to grow. And you just sit there and say, when do we turn into Venezuela or Zimbabwe and the currency just gets completely worthless? And what do you do instead? And historically, everybody looks for safe havens. Well, what are your safe havens? Well, hard assets is a good start. Okay, so within the hard asset stuff, what do you go through? And you saw it in the last commodity boom, and it started to spread beyond not just gold and silver, but you know, people were buying nickel cathodes and burying them in the backyard because nickel was worth $20 a pound. It was almost a precious metal. Yeah. And so people go to hard assets. Gold and silver have always been a favorite store of wealth. When you start looking at real interest rates, right, and real inflation. You know, I read an article the other day where the Economist put out an article about the McDonald's index. Yeah, and that's used by lots of companies for lots of things. But they were saying the McDonald's index, when it started, a Big Mac cost $1.30 or something 30 years ago. Today, it's $5.60 in the 4 major cities in the US. Nothing's changed. Well, it may have actually. I get the impression that the Big Mac is no longer a big. It's a small Mac.
It's a small Mac. That's right.
Yeah, they seem to be.
Yeah,
they seem to be shrinking products.
Yeah,
but still pushing the prices up. And so that tends to suggest that the inflation numbers that we are told are probably underestimating it. And real inflation is running even higher than that. And if you look at the current real rates of return on your money, it's negative. It's negative. So why aren't people buying more hard assets like gold, silver, maybe even other commodities? Because the real value of them doesn't disappear with time. The world is always going to want gold and silver, copper, nickel, all of the EV metals, all of this stuff that people are talking about at the moment. So that's the overall macroeconomics of the world as it's going forward. You're running on fiat currencies. There are hundreds of examples over history of where non-reserve currencies of just you may as well put a match to them because they're effectively worth nothing.
Right.
You just keep putting another zero on the end of the note, until you get to $1 trillion or trillion peso note. And I've seen it. You can go to the markets in South America and you can buy them. Yeah, you can be a millionaire and have 1 million pesos. It is whatever solis note. Yeah. Are we going the same way? Right. And then you come back to what do I do with my pieces of paper, which aren't even pieces of paper today, right? It's just electronics on a computer screen that says I've got $1 million. And you go, wow, I'm a millionaire. Yeah, but what can you buy with it? It's purchasing power. You've got to come back to. And so, that tends to form part of it. But at the end of the day, as a mine builder and operator, I actually look, and this sounds absolutely crazy, I look at the low case in my studies to ensure that I can stay in business, right? Because for whatever reason, the gold and silver price actually start heading down again, which the market amazes me at the moment. I just don't understand why it's still only where it is. But you got to be in business, right? If Metatis and Chesapeake are going to make a lot of money out of the deposit we've got in Mexico, you actually have to be operating. Yeah. Otherwise, you don't.
Silver's a little bit different in that it's very industrial, and it is in huge demand. Silver Institute had a report last year, over 1 billion ounces were going to be demanded this year. That was before the retail demand that came in February that drove up SLV, Wall Street Silver, that whole retail dynamic. So I think silver is an incredible demand push this year, both industrially and as an investment. But the price is range trading around $26, $25, $27. Why hasn't silver responded to inflation and all of the demand?
I think people don't realize the demand side of the equation. I think there's a lot of demand. People always associated silver with jewelry, cutlery, that sort of stuff. And that market has been shrinking and shrinking and shrinking for a long time. And then they also associate it with photography. And we all know what happened to photography. That's gone. What people haven't realized is this whole solar push. Yeah, all of those PV cells have got silver in them. The other one that people don't even think about is all of your electronics and all of your big electrical connections are all silver coated because silver is a better electrical conductor than copper. And so when you want a good connection, you use silver rather than copper. Yeah. You don't make solid silver cables, but they do that. All of the connections are silver.
Yeah.
And so, you say, oh, but that's only 0.1 of a gram. Yeah, but how many of these things are sold around the world?
That's right.
Right.
In the billions. And it's funny, now Apple is the 3rd largest maker of mobile phones. There's a Chinese company that moved into 2nd place. So it's Samsung and then Chinese company, I forget the name, and then Apple. There are so many of those things sold every year. It's just an amazing amount. And it's funny, I worked in the tech industry for 25 years and they used to use gold where they use silver now, but gold got so expensive. Now it's silver. And it used to be all gold connections. All the computer motherboards and electrical components were typical gold, but now you don't see it anymore because gold is, $1,800 an ounce.
Yeah, the pins tend to be still gold. Yeah, they haven't switched those to silver yet, but you're right. And so the silver market, I think people are underestimating big time what the demand is. Everybody's focused on the headline metals, lithium and nickel. Yeah, they're missing all of the others that go with it.
That's right.
Yeah, and silver is a big one of those. Um, and you're not seeing. Firstly, there's no really large outside of Cannington and Fresnillo. There's no really large primary silver metal mines,
Right.
right? Most of them are a couple of million ounces a year.
Yeah. If
Yeah.
that much. If that
If
much.
that much. You know, I worked for SSR, which used to be Silver Standard, and we had Piteria, Piraquitas, sorry. Piteria never got developed. Piraquitas in Argentina, and that was producing 10 or 11 million ounces of silver, and it was a primary silver mine, and
Right.
it was in the top 10, and that's tiny. The mine itself was tiny.
Mm-hmm.
Yeah, so you don't see these very large primary silver mines. People aren't building many lead and zinc mines because lead is usually silver's a secondary product of lead mines. There's a bit of silver comes along for the ride in the copper mines. Yeah, but even that, you won't believe this. The largest copper mine in the world is Escondida, right? Everybody knows that. It's 1 million tons of copper. How much gold does Escondida produce? No, nobody knows.
Yeah.
Because you know what? They don't even assay it in the feed to the mill. They assay it in the concentrate to make sure they get paid. They are the largest gold producer in Chile.
I didn't know
mine.
that.
No, nobody does. And so there's a bit of this byproduct production, but it's still not a lot. So the silver market, there's lots of little mines all over the place. Yeah. So it doesn't make sense. It does get consumed more so than gold.
Yeah.
Yeah, because of what you were saying.
Yeah, exactly. And gold is consumed a little bit in industry. I mean, it's used in computer motherboards, and there are businesses actually now to reclaim that out of computer motherboards to get some of that back. But silver is a different animal because most of it is industrial nowadays. And so I think we're heading in maybe to a physical supply shortage, at least available silver at current prices. The price is going to have to rise to get it out of the hands of the big bullion banks and people that own, hundreds of millions of ounces have already produced. The only other way to go is to get it from the mines. And either way, the price is going to have to increase to pull, to get people to develop those projects. We were talking before the recording about how long it takes to develop a project. Yeah. It can take 10 to 15 years on a good sized project to develop that and get that to market. So in the meantime, when you have these demand factors, it tends to push the price up quite a bit.
And I think that's why you see the volatility, because the time to respond and the ability to bring on large volumes in the silver market is really, really hard.
Yes.
Because when your average size silver mine is a couple of million ounces a year, and suddenly there's a shortage of 100 million, you sit there and go, show me 50 silver mines. You can't.
You can't. That's right.
You can't. They're not there.
It's a byproduct. I think I don't know what the current measure is, something like 58 to 60% of silver is a byproduct. So you're going to get it from copper mines, lead, zinc, but the primary mines are actually in the minority. And so it's very difficult to bring sizable ones on very quickly.
Well, and the other it's interesting. You're right. It is. It's a very large byproduct credit. And the same in our project as well. But the interesting thing, and particularly with the copper guys and the streamers have gone after the copper guys and bought the streams, right?
Yep.
So that production's already been bought, but it's come out of the economics. So the copper miner isn't even considering the value of that silver in his economics to trigger the project. He's giving it away.
Yeah.
And so it gives you a really weird dynamic where the copper miner goes, so what? Silver's $100 an ounce. It doesn't change my mine's economics.
Yeah. I never even considered that, because a lot of these royalty streaming deals, you'll get 30 to 40 cents on the dollar, maybe even less. And if you're the miner, because the royalty company's taking the risk. Yeah.
Yeah. Yeah. I'm right. So you sit there, Salobo sold a stream. I don't know. There's a whole bunch of them. If you actually go through the streamers, You can see who have they got streams on that are on these large base metal mines that are your byproduct credit producers. Well, they're not gonna suddenly expand because the silver price went to $100 because they don't see anything for it.
That's right. It's not economic for them. Doesn't change the dynamics of their cost benefit, right, to doing that.
No. If the copper price goes to $10, different question.
Exactly.
Right.
So let's get into Chesapeake, because I think there's a lot to talk about here. And I want to start off, I'm going to go Yahoo Finance and talk about your newly released here on July 26 PEA results. So kind of walk us through this. What are we seeing? To me, I immediately saw a big project, lots of ounces, very economic. That was kind of the story to me, but walk us through what's here.
Yeah, so we produced the PEA because we took over. So there was a management change and a deal that was done in early January where myself and a couple other guys came into the company with a totally different concept on how we could develop this project. The previous project was your typical mega project, billions upon billions of dollars. And it was really a project that we probably couldn't ever contemplate developing. And you needed a major to come in and buy you out. And that's fine. That's a business plan. It sat there for 5 or 6 years. That didn't happen. The majors were either busy doing their own projects or recovering from the wounds from the ones they got wrong. And so they've started to shy away from these very large capital-intensive projects. So we came in with a concept where it's actually an old concept. Start small, get it right, then expand. Right? You know, if you actually look at Nevada and all of the large gold mines that everybody point at there, or the copper industry and all of the large copper mines, I will guarantee you not one of those large mines was built to full size day one. Not one. Every one of them, they built a project, got it running, then expanded once, twice, 3, 4, 5 times. You know, I keep mentioning Escondido. It's because I used to work in BHP in the copper division for a long time, and I know it quite well. And, you know, they're on phase 5 or phase 6 of expansions now, over the last 15 years. So we've gone back to that. So we were looking for a smaller, credible, financeable, deliverable, and then expandable project in Metates. And that's what the PEA highlights. And so when you look at it, it's small. It's only 110,000 ounces a year and 2.5 million ounces of silver. But it's a 30-year mine life, and it only touches less than 20% of the total resource. And the reason we did it like that is so that it is something that Chesapeake can finance and then deliver and then self-finance the expansions. So it means significantly less dilution to the current shareholders. And I am one. I have a significant shareholding in this company. So you know, I'm in no hurry to get diluted out any more than any of the other shareholders are at the moment. So that's what the PEA was aimed at doing, was to dispel the belief that this could never be built.
And it can be. So you guys will put in, it looks like 359 million, payback 2.5 years, all in sustaining costs of 7 or 48. Is that with the silver byproduct credits?
That's with silver byproduct credits.
Okay.
So that's per gold ounce, taking the silver byproduct credits.
That's really, really good compared to what people are finding now, especially for this size of a mine.
Well, it's a gram a ton equivalent as well. So, and it's a heap leach. So heap leach gives you the lower capital. Gram a ton makes it economic, long life project, easily understandable how we could expand it at least once and cut the mine life in half and still have a solid long-term mine life. So, you know, the PEA was to show investors that there is a credible alternative to building an autoclave and selling it to Barrick or Newmont. And it's an alternative that we can do. Yeah.
And I think ultimately that's good for shareholders, because if you're an investor, if you get bought out by a company, there's a return there. But it's different than if a company builds a mine, executes that mine. And if you're in early enough before the company makes that mining decision, that's always better for shareholders, I find, in terms of what they're going to get back out of it.
As long as it's credible.
Yes.
And I think the other thing, not just the project, but if people look into my background, I've been operating or building stuff my entire career. Yeah. And I'll challenge them to find one I got wrong. Yeah. So I've built multi-billion-dollar projects. Spence was $1 billion in 2006. Today, it would cost you $3 to $4 billion to build the same thing.
Yeah.
And that goes back a bit to what we were talking about, inflation and how it's maybe not quite correct. But, Spence was the largest single build SXEW sulfide leach plant in the world when we built it.
Yeah.
Yeah. And that was on time, on budget, did what it said it was going to do, all the good stuff you expect. And I built smaller projects as well. So, I was COO at SSR for 5 years. We took that from a single struggling, not delivering mine in Argentina at Piraquitas to multiple mines across multiple countries. We went from 500 million market cap to over 2 billion. I want to do it again.
Yeah.
And Metatis is a cornerstone asset that we can build the next mid-tier gold producer on.
I see that. And let's take a look. I'm going to look at your resource estimate here on the highlighted areas, 542 million ounces of silver. And then how much gold do you guys have as well?
20 million ounces, 19.8 measured and indicated. Add the 0.6 in, you're at 20 million. So it's 20 million ounces of gold and over 550 million ounces of silver. It's actually 560 million. Yeah. And that is in the top 5 to 10 undeveloped gold silver deposits in the world. It's in Mexico, and it is just gold and silver. It's in Mexico. It's in Durango, so it's actually in one of the better locations in Mexico. I've worked with the Durango local authorities when I was with SSR. They had a silver project in Durango as well. So I understand the state. I understand the politics. I'm fluent in Spanish, so I can sit there and swear at them.
That helps.
Yeah.
I was just in Puerto Vallarta last week, and it was like, man, I need to brush up on my Spanish. It's so much harder to get along when you don't understand the local language.
Yeah, look, I lived 22 years in South America. I've lived in 7 different countries. I've worked in probably well over double that. Yeah. I understand the Latin culture because I married one. Which is actually very handy. Yeah, no, it does. It does help when I sit there and have a blank look and she can explain what happened. So I'm comfortable with Mexico. I'm really comfortable now. I've got the PEA done with the project. I think it's a very attractive project. It obviously justifies us continuing along this development path. There's still upside in there. There was a news release we put out in late June where we drilled some bulk sample holes to do some met test work. And they showed on average an 18% improvement on grade over the block model. That's significant.
It's very significant, yes.
If that's at the front of the mine plan, it goes straight to the bottom line. So, there's upside related to that. There's upside related to all of the potential expansions that come in. We didn't put out a study that includes everything. Yeah. Right. So, it should generate at $1,600 gold. So not even the current gold price and $22 silver, it should generate $110 million a year of operating cash flow.
Yeah.
That's enough to be able to self-fund the expansions.
Yeah.
And keep growing. Yeah.
And I don't think we're going back to 1600 gold. I think, you know, at 1700 we're probably somewhere at a permanent bottom, and then it'll eventually go up from there, depending on what goes on in the world and how people get into it. I don't ever see us going back, at least not in the next few years, to 1600 gold. So it seems as though your PEA, you know, assumptions are fairly well protected there. I don't think they're in any danger. Tell us about the mine life, because like you said, you're looking at some of the highest grade, less than 20% of the overall, what you consider the ore body to be. So how long do you think you can mine this?
Well, just that first project is 31 years.
31 years. Oh my goodness.
31 years, right?
Okay.
And it mines 170 million tons out of 1.3 billion.
Yeah.
Right. So how long can it go?
Can go for
how
a while.
big do you want it? How big do you want to make it?
Yeah.
But the trick is step one, get in.
Mm-hmm.
Right. If you can't build phase one, the rest becomes irrelevant.
Yeah.
Right. So you've got to find a way to build a project that is credible for a company the size we are.
Yes.
We've got the resource. We know where it is. It's not going anywhere.
Mm-hmm.
I don't have to drill the hell out of it to make it bigger.
Mm-hmm.
Yeah. You know, I was talking to somebody else and they said, why did you drill and add to add more ounces? You don't need more ounces. Well, I didn't drill to add ounces. I drilled to get samples for a metallurgical test work program that I have to do for the PFS.
Yeah.
The assays happen to come back 18% higher than the block model said.
Mm-hmm.
Great. Wonderful. That's a nice surprise. Thank you very much. Share it with the shareholders. That's significant.
Yep.
Yeah. And potentially we will now go back and look at an infill drill program around those holes, because there's obviously something we've missed.
Right. You're missing a high grade vein, some sort of body that you got to infill drill to find that out.
Yeah, there's obviously some sort of grade differentiation in the intrusive that we didn't understand when we built the block model, and it was built on quite wide space drilling because it was built as a bulk target.
Right.
And so improving the resolution around there may give us a continued nice surprise for what is in the early years of the plan. And that has a big impact on your economics. So you put the two together, I can expand it until you're fed up, right? And I've potentially got a higher grade piece of the high grade core at the start, right? So it's really a case of, this is approximately right. It's a PEA. This is what it sort of looks like. There's some layouts in the presentation. There's the production profile, which you put up a moment ago. There's the flow sheet. There's the capital costs, the operating costs, all those sorts of things are in there.
Yeah.
And when we get the full report out, there's obviously even more data behind that, and analysts and banks and whoever can start to understand it. But it shows you what the playing field looks like, and then has these amazing upsides around grade, mine life, expansions. Yeah, and like I said, how big is big enough? The original 3.5 billion was 90 or 100,000 tons a day. Right? That's 9 times where we are at the moment. Yeah.
So what is next for the rest of the year? If an investor chooses to get in, what should they expect you guys to do for the rest of 2021? Or you mentioned infill drilling. What else are you guys doing for the project?
Three things. Get the metallurgical test work going. And then as we get sets of results, release them. Yeah. Heap leach test work is slow. I'll put that out front, right? You don't get a result in 48 hours.
Right.
Okay. So each column I run, it runs for 6 to 9 months. It is slow. But that's part of the reason why the capital cost is so low, because I'm using time instead of money to get the oxidation, right? So the test work is the big one. The infill drilling, we'll probably look at when the program will be, but I suspect it will be towards the end of the year, just because I don't really want to try drilling there in the wet season. I don't need to make myself problems. I only need the drilling before I produce the new block model and the PFS, which will be in 2022 anyway. So there's no mad rush to go drill tomorrow. Yeah, I'll let the rain stop and the hurricane season go away, and then we'll look at drilling. And also expanding out the current environmental monitoring so that I've got all of that information, because the expectation is once I complete the PFS, I will start the permitting process in Mexico.
Right.
Because I'll have enough solid definition that by then. Yeah.
Yeah, makes sense. So what does the permitting process look like in Duranko?
The permitting process in Durango and in Mexico in general, because it ends up going federal. Durango obviously helps and can push it through with the feds, but at the end of the day, it all goes to the federal authorities in Mexico City. We took one through when I was with SSR, and it took us about 12 to 18 months to do it. Okay. I've got about 2.5 years in the schedule that's in the presentation. The reason for that is if I'm going to put fat anywhere in a schedule, put it on things that I can't control, because that's what will bite you. The things I can control, I know how long it takes me to do each of the steps. Again, probably because of my background and learning the hard way, say what you're going to do and then actually deliver it. Right. The schedule, people will say, but you can do it way faster than that. Yeah, under promising and over delivering is a much better philosophy than the alternative.
Yes.
And so, if we can do it faster, we will. But I'd rather be in control of my future. Yeah.
Yeah, and under delivering is not a good thing in the mining industry. Investors get quickly tired of that, and so do boards, I find. So yeah, definitely appreciate putting in more time and setting expectations up front is definitely the best practice there.
And I think that is a statement you can put across the entire PEA. There is nothing in that PEA that is a stretch. I'm not using ridiculously low mining costs. They're $2.20 or 30 or something. I'm not using ridiculously low capital costs, operating costs, because I expect to build it. I expect to be here in 2026 and be able to stand in front of investors and say, there you go. It's up, it's running, it's operating. Now we're looking at the first expansion in year X and the second expansion in year Y. It will be self-funding, or I need $50 million or something. I don't know. Yeah. And go forward that way. It's a much better life than the alternative where you get beaten up every time you talk to an investor.
Of course.
Yeah.
I definitely understand that. Alan, any last thoughts on the company in general before we wrap up this interview? What do you want to leave with investors as the most important thing?
I think that, as I've said a couple of times, credible, financeable, deliverable, and expandable project on a massive asset in Mexico, over 20 million ounces of gold, 560 million ounces of silver, that will become the cornerstone asset to grow the next mid-tier gold producer, which will be Chesapeake. Yeah. And I can expand it as many times as it makes sense. That's it in a nutshell. And we're cheap as at the moment.
Yeah, perfect. Thank you so much, Alan, for coming on the program. I love the project. I love the fact you're in Mexico. I love the fact it's got gold and silver. Those are all great things for us and our followers and investors. And just appreciate you giving us your perspective and your time to help investors understand your project and what the value is.
No, thank you, Robert. Thanks for your time. And I hope the investors enjoy it. And if they're interested, go to our website, chesapeakegold.com. Give us a call, drop me an email, come and see me at Beaver Creek. I'll be down there if you're in the US. Happy to meet with you.
Fantastic. Thank you so much. We'll talk to you again.
Thank you.